Hello and welcome to another Smaulgld live stream. Tonight is Saturday, October 20th, 2018. And tonight's topic, big increases in JP Morgan and Brinks COMEX silver vaults. We're going to discuss that and compare it to what happened in September. We're going to take a look at ETF holdings. We're going to take a look at the Indian gold situation and also the latest change in the commitment of traders at the weekend. So let's take a look now at the gold and silver prices over the last month or so. And then we'll take a look at the gold-silver ratio and see where that is before moving on to the topic of the evening. So here is the gold price 1 year. We opened the year at $1,303. And we got as high as $1,354. And we've gotten as low as $1178 back in August. And currently we're at $1227. That's down $75 or about 5.79%. So this puts into perspective of where we've been this year. We had a very nice move into the new year, and that held early in the year to about May. So this is a 1 year. This is not a year to date. This is 1 year. From October to October, down about 6%. Now let's take a look at the silver price. The silver price is worse. Let's take a look at the 1 year silver price. And we see that pretty much at the end of the year, the price was around, well, October last year, 1741. And we opened the year around that same level. You could see it dropped in January, but by in December, but by January 1st, it was back up at almost where it was in late October 2017. So around 1741. Got as high as 1752, early February, and then it never really made it, and you could see it heading straight down. Big decrease from the middle of June until September. So like 4 straight months of just down goes Frazier. You can see that. And we've rebounded a bit and bounced along up to about 1461, the most close. But you see the difference. That's a 16% decrease over a 12-month period. And gold was down less than 6% during the same period. And what does that do to the gold-silver ratio? Well, let's just take a look at the 1 month. I should have done the 1 year, but you can see we're up around 84.1 on the gold-silver ratio. So it's basically gone straight up over the last month, but over the last year it's gone even higher. It used to be under 80 to 1 back in October of last year, but you can see now it is well over 80 to 1. It's at 84 to 1. Okay, now what I want to do is take a look at, we had covered the Indian gold imports for August, and we noted that 95 tons had been imported, and that was a pretty big number. And I think Silver Doctors covered the story, as did Dollar Collapse. And I think what Silver Doctors was mentioning is going forward there may be difficulty sustaining that level of imports, and one of the reasons they may have that difficulty is the value of the rupee. The value of the rupee is not doing very well. Let me show you the price of gold in rupees. And the price of gold in rupees is very expensive. It's might be at an all-time high. I mean, it's at 90,155 rupee. And what that means is that gold is very expensive for Indians. Now, the time to buy gold is obviously when it's low, and Indians know that, and they like to buy gold and like to buy silver when the price is low. Now, even though the price of gold is low in dollars, it is not low, as you can see here, in rupees. And that may curb gold imports going forward, because the time to buy, not only for just economic reasons, is the time to buy when it's low, but when you're concerned about a currency collapse, like if you lived in Turkey or Venezuela or Iran or any of those countries where they have periodic issues with their currencies, you definitely want to have the gold before the currency falls. And the Indian rupee is at near all-time lows against the US dollar. Now this chart shows a couple of years here, and you can see it's at 90,155 rupee. Let me show you a longer-term chart on the Indian rupee and where, I mean gold versus the Indian rupee. This one is a chart that goes back to 1999. Now, when you take a look at this chart, you'll see that gold really has risen against the Indian rupee ninefold since the year 2000, when you could get an ounce of gold for about 10,000 rupee. You can see that as represented by the blue line. Now, of course, back then gold was under $500 an ounce, but even so, you're talking about $300 an ounce to $1,200 an ounce is a 6 or 7-fold increase. It's not a 10-fold increase as you see here. Now, I think it looks like in 2013 the gold price in rupees hit its peak, and it got almost to 100,000. It was about 97,000 rupees, but still you can see that the price of rupees in the last, since 2016, has gone higher, even though the price in dollars has gone lower. And you can see in that by reflected by the gold line, you could see the price peaked in 2011 and then pretty much has gone down ever since. A little bumpiness, and then it's kind of flatlined there, but the price in rupees has gone ever higher. So we'll keep an eye on that. We should be getting the September numbers soon. We just published the August numbers that Nick Laird pulled from the Indian website. All right, now the next thing we need to go through is the ETFs. And remember what we talked about, how the gold price tracks the ETFs. That's my theory. It's not even a theory. You can just see it on the chart. The black line being the gold price, and then those masses of color indicate the different ETFs and the amount of gold held in them at any given time. And you can see how they pretty much track the inflows and the outflows of the gold. And it looks like, and Craig Hemke has pointed this out, the gold ETFs don't control the price of gold. They tend to almost follow it. And I'll show you a better chart that highlights that concept. He's right about that, because if you look at a more granular chart of the gold flows into ETFs, you'll see that the price moves and then the flows happen. So in this chart, you'll see what's happening. The price is going down. You can see to the far right, you can see the price going down, and then the ETF flows going down, meaning gold is leaving those ETFs. And then you see the price going up where it hits the bottom there, where we bottomed around, September or so. The outflows were still happening, but now you see as the price sustains a bit of an uptick that we've had this month, you could see the very far blue line, you see the inflows start to happen. So it tends, as he mentions, Turd Ferguson, Craig Hemke, the flows follow the price. So I just wanted to show you that. Now, let's look at silver. Silver, there is no correlation whatsoever. Silver ETFs seem to be they just keep adding more silver, piling on silver. And you can see in this chart, you've got SLV, you've got Sprott, you got Deutsche Bank, you've got UBS, ZKB, all the different ETFs. And ever since 2006, when they started them, pretty much just adding and adding and adding. And now you can see the black line that runs through the SLV green. That's the price of silver. That's going down. But that hasn't stopped the increase in amounts of silver held in ETFs, which are pretty much at an all-time high. If you look, they're about 610, 620 million ounces in those ETFs, and that's more than a few years ago. Clearly more than 2011 when the price went up to 50. Back then there was only about 550 million ounces of silver in the ETFs. So I did prepare. I'll show you. Here's a more granular chart of the silver ETF holdings just over the last year, and you can see the blue line, or those blue stock, you can see the holdings increase as we go along. And this is not just ETFs, this is mutual funds and different types of holdings, but it's the same concept. And you can see the holdings there, as indicated by the blue line, are going up, and then you could see that faded black line and the price going down. No correlation whatsoever. So the gold ETFs tend to follow. The price goes up, people start pouring into the gold ETFs, the price goes down, then they pour out of the ETFs. Whereas the silver ETFs, doesn't matter what the price does, they just keep adding to the ETFs. Now let's talk about adding to the COMEX vaults. Now a while back, about a month or two ago, we were talking about the COMEX vaults and how they hold those 1,000 ounce good delivery bars, 999 silver. And there's a number of vaults that are authorized or COMEX approved to be able to deliver silver if silver is required to be delivered. And the only silver that's eligible to be delivered are those 1,000 ounce bars. And when they enter the vault, they enter as eligible. And if somebody or a client wants to sell them, they have to register them for sale and say these are available for delivery. They're all available for delivery as long as they're in eligible form, but they have to go one step further and make them registered. Now you cannot, even though they're perfectly fine, you cannot deliver silver eagles or any other type of silver on the COMEX. However, you can store that stuff in the Brinks vault, in the JP Morgan vaults. You can store them in the coins and things, the CNT vaults. It's just that they're not eligible for trading on the COMEX. So whatever you see these charts, we're talking about silver in eligible form. Now, the interesting thing about Brinks, you can kind of see it from the chart, is that they are now at 48.18 million ounces. That's more than the record amount of American Silver Eagles produced in 2015, and it reflects a more than doubling since 2016. So we know JP Morgan's been getting a lot of attention for their vault, adding a lot of silver, and a bunch of foolish conspiracy theories about them having 800 million ounces and them buying silver eagles and Canadian maple leafs without any evidence whatsoever. The Brinks depository is really increasing its its eligible 1,000 ounce bars in the Brinks depository. Now, no one accuses Brinks of stacking silver for their own account or any kind of nonsense like that. This reflects, however, I think, a more important observation is, as we've seen with the silver ETFs, there is a stockpiling of silver. You see it in the silver ETF and the related products. You see it in the Brinks depository. In fact, if you add up, I don't have the chart for you tonight, but if you add up Brinks, JP Morgan, CNT, all the other Brinks COMEX eligible vaults, there are almost 300 million ounces, of which JP Morgan is a little less than half of that, but still, that shows a lot of silver being stored. It's very hard to see on this Brinks chart, but we're already at 48.185 million. That's a straight shot up. You can't really see it on the chart. But when we started covering this less than a month ago, they're at about 40 million. They're actually adding more silver to their vault than JP Morgan. And in fact, we covered in September, we're going to see the JP Morgan chart in a second. JP Morgan actually sold down, and again, it's not necessarily JP Morgan silver, it could be client silver, but their vault saw an outflow of silver as the price dropped. which mean that they had been buying, if you believe this, the theory, they had been buying silver from 20, 19, 18, 17, 16, and then when it got to like 14, they decided to unload about 6 million. So they lost about 6 million ounces, and as the price has risen, you'll see, they've added back silver, back to where they've added back the 6 million ounces that they lost. I'll show you that chart now. And you can see it on the chart. There is a, if you go to the far right, you can see they're at 145.536 million, but you can see to the very far right that sharp price, that sharp jagged going down, and then it goes right back up. So they sold at the low, like 6 million ounces, and as the price has risen, they've bought back about 6 million ounces. When we first looked at this, or not when we first looked at it, at the low, recent low is at 139 point whatever million ounces, and they seem to have added that back. Again, we don't know whose silver this is. Doesn't necessarily have to be JP Morgan's. Probably isn't. Maybe some of it is, but indeed, these vaults contain silver on behalf of clients as well. All right, let's see what else we got. Now, the last thing I want to go through is the commitment of traders. There was another story out there. Historic commitment of traders. The commercials are finally net long, and well, they're not anymore. And I had predicted this a while back, about when the story came out. It was the latest silver pump, silver set to skyrocket, historic positions now, and I had explained it away succinctly, and this is somewhat of an I told you so moment. If you look to the far right at the silver price, and we covered this early when we looked at the price of silver, it dropped for about 5 straight months. And to me that meant, if you follow these charts, there's like a yin-yang with the reds, the commercials, non-commercials, and the blue, the commercials, whereas the price goes up, one group goes long and the other group goes short. And then as the price comes down, they start to sell down their longs and their short positions, and the whole thing ends up being like almost a mirror trade. Well, if you look at the far right, you can see the red line, which is the non-commercials, going down as the price goes down. Unfortunately, the price kept going down, so they had to keep unwinding their long positions, and they eventually went short. And what happened with the commercials, who are normally always net short, because the price fell for so long, they eventually, as you can see, the line going, they eventually ended above the line and were net long. And I said, if that happens, and if eventually the price reverses and we start to see the price go higher, I would expect the commercials to now go short. And that's what they've done. You can see now the commercials and the non-commercials, everyone is net short. Now, if you're a pumper, you'll say, oh, it's setting up for a massive short squeeze. Everyone is short. No, it just means that that's where they ended up with their trades. These commercials and non-commercial traders, the way they trade, they're not looking long-term. They're going back and forth. They're looking to make money off of the changes in the price. They're not holding on to let it ride and make profits and all this other nonsense that you hear. This is just what happens. If you go back over years, you'll see how it happens. They're there back and forth, back and forth. They could be trading Beanie Babies. They don't really care. And you can see there's almost a beautiful symmetry in how this chart looks. One group goes long, the other group goes short. Now, it's interesting. The only reason they're both short now is because you had that extended period, which was historic. You never really had 5 months in a row like that where the price just drops. There was really no interruption in the price of silver. That's the historic thing. What the traders do doesn't indicate an intention, in my opinion. It indicates reacting to the price being at that level. Now, they may have had something to do with manipulating the price there, but this is the natural positions that they would take as a group, net. They would go eventually, because the price went so low, they both end up being short. All right, let's see if we've got any questions. I think that's it for the charts for tonight. Tomorrow we're going to do, in case you missed it, top gold and silver stories. And I'm going to be covering gold back in the spotlight. Somewhat of a review of what's happened in the gold market. Lots of things happening. Hungary, Poland, Kazakhstan, Russia adding gold to reserves. ETF going in is up increasing their holdings as well. All right, let's take a look at the questions and the comments that we've got. GG, skip silver, buy gold and crypto. Why? You don't need a dump truck to move it. Well, that is important. That's a point I like to make all the time about gold is and versus silver. Very wealthy people. I mean, for us, you know, if you got $2,000 worth of gold or silver, yes, it's easier to keep a gold coin versus, you know, I don't know, what's $1,000, $2,000 worth of silver. You know, I should know that. So one ounce of gold would be $1,200, and you would need 85 ounces of silver to equal that, or 84 ounces. So you'd have to do your 84 times 14. Well, it's still a lot. You'd have to have a, you know, you'd have to have 1,000 ounces of silver. No. You'd have to have 80 ounces. 84. That's no. 84 ounces of silver. You'd have to have, which is 2, 4, 6, 8. That's 4 tubes of silver eagles. That's, you know, that's manageable. It's not like it's gonna destroy your storage space. But if you multiply that by rich people who might have $10 million, they don't want to have a warehouse full of silver. They'd rather have a draw full worth of gold. So that is definitely a consideration, is that you're dealing with 84 to 1. I don't know why I blanked on that. That's obvious. 84 ounces to 1 ounce is the current ratio. We discussed that earlier in the show. Okay, what else do we got in the way of comments? Crypto Shrugged author is here, and I'm reading his book, almost finished. Crypto Shrugged, J. Lee Porter. We're going to get him on the show to talk about that book. Prashanti Girl says, hi, all, hello. Andrew says, bonjour. I don't know if it's bonjour. It's really, well, it's not bon nuit. That means good night. But it is evening here in the United States. Pablo Pina, how come the ETF didn't climb higher when silver reached $50 an ounce? Reason being, was up less than a day. No time for ETF to climb. Well, the answer is, and this is just, there's no right answer to this. Remember, the silver ETFs have not followed the price. They just pretty much add as the they've just been adding all along. They don't tend to follow the price. So just because the price went up doesn't mean that the people would invest more in ETFs. Now in gold, when you see the price go up, then you see people following. You would not see the you would see in gold the increase in gold holdings if the price rose, or that's what's happened historically. So the price rising for silver doesn't seem to change the fact of whether people are going to add or subtract from their ETF holdings. Drunk Octopus, so why would I have heard not to hold physical metals in our homes? I don't know what you would have heard, so I'm not sure what you mean. Trace Young, the last time the commercials were net long, the silver price actually fell for a few months. Definitely not a game changer. Absolutely not. I mean, that's right, Trace. I like to say game changer. I know you like to say it too. But when people read into this stuff, it's basically, it's just wishful thinking. You just like to say, oh, look at this. Cherry pick a piece of data and start screaming silver set to skyrocket. I mean, how many times have we heard this based on someone, some analyst or some anybody, just pulling out a fact or just a piece of something and start screaming and yelling historic this and game changer and silver set to skyrocket, never happened before. That doesn't necessarily mean, as we know, that anything's going to set to skyrocket. In any event. All right, what else do we got? Pablo Pina says, thanks. All right, well, I think that's about it, unless we have any other questions or comments. We'll be back, as I mentioned, tomorrow. We're going to be doing the gold stories, a recap of those. Also, we're going to be talking about the very underreported things that are happening in the crypto space. Most people are either not interested in cryptocurrencies or are only interested in cryptocurrencies in the price, and they're not really paying attention to what's happening. And this is one of the things that I noticed the last 2 times. People followed cryptocurrencies in 2013 because they went up from like $50 to $1,000, and then people just lost interest in them. But that didn't mean that things weren't going on in the space, and all of a sudden they became famous again in 2017, and everyone was interested in them, but just because the price rose, and then the price fell off in 2018, and then the interest was gone in the general public. But there's a lot going on, especially with Microsoft and the New York Stock Exchange and Fidelity and TD Ameritrade. A lot of and Goldman Sachs are making big bets and moves in the crypto space, specifically around not just their own private blockchain stuff, but Bitcoin and Ethereum and other cryptocurrencies. And that's just flying under the radar because no one really cares because the price isn't moving. But I think it's possible that could have an impact on the price in Q1, Q2 next year. All right, anything else? If we don't have anything else, we're going to call it a night. Oh, no, we got more. DW, thanks for your insights. Well, thank you for listening. GG, would love silver to go to the moon. If that happens, bad things have to happen. Well, not necessarily. I mean, silver could rise. So silver could rise if there is an economic boom where there's new industrial demand. It could rise. It rose in 2011. It wasn't that bad of a situation. The financial crisis was pretty much over. The reason silver rose in 2011 was because you had gold rising for a couple of years, and you had QE. And QE was deemed to be a currency destroyer, a dollar destroyer, a symptom or a symbol of the fact that the economy had not yet recovered. And that's why silver rose. But you could have, I mean, silver could rise. But I think in this scenario, you might have the same thing. You know, if the economy could already be slowing and no one knows it. I think that's what always happens. They raise interest rates, and sometimes they're raising interest rates when they don't realize that the economy has already started to head in the other direction. And, you know, we saw Sears close down. That's not a good sign. We saw retail sales are at 0.1%. versus a 0.6% in September. I mean, I don't know what's happening, and you don't know these numbers you can trust them, but it's possible that the economy is slowing despite the tax cuts because interest rate rises have really put a damper on home builders. New home sales are starting to fall. Home sales are starting to fall. So it may not be that the economy is going to continue to grow at this 4.2% GDP rate. Also, China's GDP is falling, went down to 6.5%, it's the lowest since 2009. It's possible if the U.S. is still going to grow that they might intersect, and that would be big news. That if the U.S. GDP got to like 5.5% and China's was down to 5.5%. Crypto shrugged. Yep, lots of behind the scenes moves. And, you know, they're not really behind the scenes. They're announcing them. But I think had they announced these types of initiatives back in December, January, when the prices of these cryptocurrencies was going nuts, they would have driven them even higher. So I guess they wait to announce them when the price is lower. Gee, do you remember to .com bust, compare value of Amazon before and now? Well, that's possible too. And then what you have is all the ridiculous ICO companies that just go bust, and they're like Pets.com and Webvan. But then you have the rebound, you know, Amazon, eBay, those companies came back, and they came back even bigger with higher market caps than the .com period, where at the peak of the bubble. They're now much higher. Pablo Pina, did you hear the new military technology involving silver and gold? Yes, I did see that. It's an alloy or something. Will that be a game changer on PM prices? I don't think so. I don't think any industrial demand for gold or silver currently, the way I see it, is a game changer because generally when you require silver in an industrial project like solar or electronics, they figure out ways to thrift and use less of it, or nanoparticles or whatever. And if it ever got so expensive, there are alternatives that people can use other than gold or certain things. There's no substitute. But for example, solar panels, they can use less and less silver. And at some point, they figured out how they can use aluminum. But right now, it's still economically feasible to use silver. In fact, I know over the last 10 years, the amount of solar panels and installations has really increased, I don't know, 5-fold or 6-fold. But the amount of silver used has gone up from like 60, 70 million ounces to only about 100 million ounces. So that is an indication that it's not linear. It's not like you take the 2009 number and you say, well, in 20 years, we're going to use 50 times. We're going to have 50 times more solar panels, and therefore we're going to need 50 times more silver. It doesn't work that way. They will never, if it ever takes 1 billion ounces a year of silver to make solar panels, either they won't make solar panels because it won't make sense to make them, or they'll figure out a way not to use 1 billion ounces. They'll make the solar panels either partially with silver nanoparticles, with aluminum. They'll do something else. So when people are counting on exponential growth and assuming that the amount of silver that will be required is going to remain constant, it doesn't work that way. No business would ever, you wouldn't just keep making solar panels and then trying to sell them for an increase in price that the market wouldn't bear. Guillaume Charles, what is the value of cryptocurrencies based on? Well, cryptocurrencies, I don't think you can, no one has been able to figure out what the value of cryptocurrencies are. One thing is like adoption, or people are using them, and if they accept them in stores. The problem I have with that theory is, if I have a Bitcoin and I find out I can spend it at Amazon and I spend it, I've sold it. Well, selling would drive the price down. So I don't like the idea that, oh, if you can spend them everywhere, well, then you'll sell them everywhere. Then the question is, let's say I have a Bitcoin and I buy it for $6,000. It goes to 10 and I spend it. Why would I buy more so I can buy, unless that's speculation, but you don't buy Bitcoin so you can go spend it. At least I don't think you would. There's no reason to go out and buy cryptocurrency so you can spend them, because you can spend your cash, you can spend your credit card. Now, one reason to go out and buy them might be, and this would give them value, is if you couldn't spend your cash, or you had your credit card pulled away. Something like that, where you weren't allowed to use. And that's where Bitcoin is valuable, in that they can't shut it down on you and they can't change the price on it. But that might give it value, but that value is always there. That's always been a private currency. I really don't know. If I knew, then you could tell that why Bitcoin goes up and down. I think a lot of it's based on speculation. I don't have the answer to that. Only if Amazon switches to cash, which they would. LOL. All right. Oh, there we go. Mike M. That's why it's more of a store of value. Others will be currency for coffee. And that is actually, if you think about it, that's why Bitcoin is more expensive relative to other currencies that were created to be transactional coins like Monero, Zcash, Litecoin. I'm trying to think of some of the other Doge. Yeah, because those will be used as currencies probably more than Bitcoin, because the price of Bitcoin is very expensive. And that creates a self-fulfilling that if it's expensive, you're not going to spend it. And then you're going to store it, and then people are going to want it. And then also because it has a much smaller built-in number of 21 million compared to the other coins that have higher caps. I think Litecoin is 84 million. Andrew, RBC Bank does not allow me to buy Bitcoin anymore on my Visa debit. Which one is RBC? Is that a Royal? I don't know which one that is. Pablo Pena says agreed, store of value, but very volatile. Now, I have heard, one thing that happened in India was they the Indian banks told the crypto exchanges that they cannot interact. Well, the Reserve Bank of India told the banks that they cannot interact with the crypto exchanges. So I think Zpay, I think it's called, the largest one in India, just moved to Malta. Now that doesn't mean they can that means they can exist, but they can't still transact with Indian consumers. I think it's a mistake. If you cut off the banking system from the crypto system, you run the risk of having a separate ecosystem which you have no insight into, no control over, you can't see what's going on. I think what the US and other countries are doing is smarter, is they're really encouraging the on-ramps and off-ramps of cryptocurrencies to be in the centralized exchanges, and that's why you're going to have this back thing by New York Stock Exchange and Microsoft. That's why Coinbase wants to become a registered alternative trading platform. Gemini's doing the same thing, ETFs, so they can track the Bitcoin and the other cryptocurrencies in and out of the legacy banking system, bring it into the payment systems. And I think that makes more sense. And you make more money for entrepreneurs in Wall Street and Silicon Valley, and also the regulators have much more insight into it if it happens that way. If you just say you can't use the banking system if you have cryptocurrencies, well, then they're going to go and trade on their own. And I'd imagine in India they could probably trade cryptocurrencies for gold, and no one would know about it. Would never go through a bank transaction, would never be sold on an exchange. The Indians would trade their cryptocurrencies for other goods and services, and then it would be a tax issue because you couldn't figure out if they're escaping taxes. See, if you have it through the banking system and through the exchange, and an Indian sells it on the exchange, well, then there's a record, and then you can track him down for his taxes. If you force him out of the banking system, then he's going to go and trade, and he may or may not report his transactions, and that creates a regulatory cost, because now you got to go and track everyone down. Whereas the other way, if everything is allowed to go in and out of the system, you only have to track down the people who don't go in and out of the system, which will be far fewer, because most people are used to trading within regulated systems, especially institutions. They don't try to trade off the grid or anything. I mean, they're going to trade their cryptocurrencies the same way they trade their stocks and bonds, and they're going to report the gains. And the same with people who have Schwab accounts, TD Ameritrade, Fidelity accounts. They're going to trade the same way. But if you can't trade that way, then it creates a situation where more people trade off, and it's harder to track down. All right. Oh, let's see. We got more comments here. Royal Bank of Canada. Okay, so you're a Canadian. Run the risk of massive flight. Mint Mark SI. This holiday season's mugs will be in more demand than Eagles. Yes, I did not make the pitch for Smaulgld mugs, and I think I haven't sold one in the last two. Usually I sell a couple a night, but I have not sold any in the last 2 nights. Maybe I've stopped pumping them. But I'm going to put a pump in from right now. If you want to buy your Smaulgld mug, I know that that Crypto Shrug sent me a picture of his mug today. That was very nice. Thank you for that. There's the link to buy your Smaulgld mug. That's for the classic and super classic mugs. They're $19.99 and $23.99 with free shipping and tracking. But if you want to get the espresso mug or the travel mug, you got to order that from the manufacturer. There's also other Smaulgld products there. And while I'm pitching you, maybe I'll pick up a patron tonight. It's always nice to have people appreciate your work and donate a small amount or large amount each month via Patreon. Or you can make a one-time donation via PayPal. I like that. Also, I do accept Bitcoin, Litecoin, and Ethereum. And if you also would like to buy gold or silver, you can do so through the Smaulgld affiliate links. I do get a small commission if you buy through those links at SD Bullion, Money Metals Exchange, and Golden Eagle Coin. It's not investment advice to buy gold or silver, but if you're going to buy, you pay no more nor less than if you visited those links directly. So here's the SD Bullion link. What about the t-shirt, hoodies, and sweaters? I do have t-shirts. I don't have hoodies and sweaters, but if you would like them, I can instruct the company to prepare Smaulgld hoodies and sweaters. Pablo Pina. Wouldn't crypto need a face value to replace, say, the $100 bill? No. Would an ounce of silver need to have a... This goes into like... what's that guy's name in Mexico? Very famous. Anyway. Don't remember his name. Doesn't matter. Mexico, he was arguing that they should issue an ounce coin without any value stamped on it. So if you have a unit of value, 1 Bitcoin, 1 ounce of silver, 1 ounce of gold, then you just value that as whatever it's worth. You can value it versus fiat. You can value it versus number of barrels of oil, whatever it is. But I don't know how it would replace the dollar bill. What the Fed is thinking of doing is having I think they have this initiative called Faster Payments, and they're looking at different crypto initiatives, and one of them is FedCoin. So that would basically just be a cryptocurrency that is a dollar base, and that would have a value on it. It'd basically just be the current dollar system on a blockchain. But Bitcoin doesn't have to change. Well, I guess, yes. You didn't ask about Bitcoin. You asked about crypto. Yes, so it might, if you issue a sovereign crypto on its own blockchain, it would have a value. I don't know if they'd call it a dollar, but I think the Fed Faster Payments FedCoin initiative, if they were to choose that one, would have face value. William Charles, I like the Krugerrand for that. I think you're talking about the value, whatever the gold content is in a Krugerrand. Yeah, I don't think no, that's right. That isn't worth X amount of rand. I don't think. I think it's just an ounce of gold. Mark Snyder, the supply of silver has been declining for a few years. Will the price of silver go? When will the price of silver go up? Well, the supply actually peaked in 2016, even though people were saying it was going down. It wasn't. It was going up. It hasn't declined much. I mean, it's got as high as about 880 million ounces. And I think this year, last year was 860. Still very high. It's still in the 800s. It hasn't fallen off a cliff. So it's very hard to track this silver price. I don't know really what drives it other than the paper trading, because supply and demand, according to the official, not official numbers, but the different numbers you get from people who track it, is that there's a deficit. They make less silver, they produce less silver than they use, and that's been going on for years, decades, and the price doesn't go higher. So I don't know how that works, unless there's some magical stockpiles elsewhere where they're getting the silver, or they just got their numbers wrong. Maybe it's possible. One thing I thought is maybe the production numbers are much higher. And the reason I say that is we know that about 65% of silver produced comes from secondary mining, and maybe they don't get a handle on that silver. So, for example, like Barracks, big company, they may not report their silver ounces exactly because it's not really material, the amount of money they make off it. I'm not saying that Barrack, I'm just throwing out any example. What I mean is that there's probably a lot of secondary mining where there's a lot of silver being produced, and it doesn't get accounted for properly. It gets accounted in other, it gets accounted as X amount of dollars, and it's mixed in with other base metals, and maybe that's what it is. And maybe there actually is more silver being produced by the secondary miners that isn't properly accounted for by these companies that put together the amount of silver. That's possible. Now we can track the silver that comes directly from silver mines, and even those silver mines, I don't think there's one out there. Maybe First Majestic has over 50% of its revenues in silver. Most of the silver mines, even though what you call a primary silver mine, they do silver equivalent ounces. They actually mine other stuff too. So that's probably why that silver is not properly accounted. Mike M, it is volatile, will be for a while. Industry is still nascent. I like that word, nascent. ever growing and growing, will be volatile for another decade. That's not a bad thing, though. Well, it is if there's an opportunity cost. A lot of people like to say, oh, I can buy more. I've been saying that for 10 years. I can buy more. I mean, you could be buying more for the next 30 years, but I guess if you want your whole life to pass you by, thinking that low silver prices are a buying opportunity, you are missing out on other things that could make money. I mean, just stacking silver for the last 10 years has not been a smart move. And I know that sounds anathema, or it sounds heretical, but it really hasn't been a smart move. And the people that sell silver will insist that the gold-silver ratio has to go down and silver has to skyrocket and set to soar and all that stuff. And they say it with such conviction, and they repeat it, and many other channels repeat it, and hasn't been true. But then you get the you'll see. It's like, okay, I'll see. All right, everyone, I'll let you go. Thank you very much for joining me tonight. And tomorrow, I'll probably be back at 8 o'clock. If not, definitely will be releasing the week in review, gold and silver stories. Stacking Bitcoin for the last 10 years has worked out all right. And that's definitely true. If you were starting, I don't know, back in 2009 and just bought $10, $3, $20, whatever the prices were, even though the price went from 20,000 to 6, I mean, you probably bought it like $30, $40. So you're definitely doing well. So the analog there is, well, you're buying silver at these cheap prices, and one day, which I actually doubt that it's going to go to $50, $100, $200. But anyway. All right, Angela Morris, good to see you tonight. And we're going to sign off with the thumbs up comment. Thank you very much for listening, and we will see you tomorrow.